The gold prices are trading at a two-week lows, but the Indian gold importers have stayed on the sideline for a third straight week due to policy uncertainty on the shipments and supporting premiums in the Indian markets. The gold prices have declined on back of speculation that Fed will scale back bond buying soon. The gold prices are now down 23% in this year, while the Chinese imports have declined 4.5% for the month of June as well. The Brent crude prices in the meanwhile have slipped as well, dropping for a fourth straight day as supply worries eased and on caution ahead of the data from China and the United States. The NYMEX crude has shed gains ahead of the US oil stockpiles weekly data. According to the reports, the stockpiles may have declined to 6-month lows. Let's get in then. Vijay Bambani, who's author and CEO BSPL India. Also joining us is Sugandha Sachdev. She's EVP and in charge Metals, Energy and Currency at Religare Securities. Sugandha, hi, welcome. Let's start with you first. What's your sense now coming in for the precious metals, the kind of decline that we've continuously seen? How much further decline do you see in the international markets?
See, in case we see the domestic scenario, gold prices have been supported basically by the depreciating rupee. But then if we see the international scenario, gold prices have been facing a very stiff resistance at $13.50 an ounce in international market. That has actually led to a sell-off in gold prices. Moreover, prices have also been beaten down by Fed recent statements that they would taper their bond buying program, which has been supporting gold prices in the last few years. So that has been kind of bearish for gold prices. But then prices are seen facing some support at lower levels of around 27,300 mark. So I think there should be a bounce back in prices from current levels, and I feel prices can again move higher towards the level of 27,700 on the higher side, but one should initiate long position at levels of around 27,300 only, keeping a strict stop at 27,000 mark, and prices are likely to move higher towards the level of 27,700. As the US economic outlook has actually improved, this has actually dented the safe haven demand for gold, which is putting pressure on prices. But then there should be a rebound in prices, as prices are also supported by the level of around $12.60 an ounce in international market. As far as silver prices are concerned, I feel 42,500 is acting as a very strong resistance on the higher side. So as long as this level is not breached, it should be a sell and rise strategy overall. But then for an intraday stance, I feel there should be a bounce back in prices from current levels. So one can initiate long positions at levels of around 40,700 to 40,500 mark, keeping a stop in place at 40,000 mark, and prices are likely to move higher towards the level of 41,500 on the higher side.
Vijay, what's your sense coming in for the silver prices essentially? Because this week yet again has been bearish and we've seen the prices decline almost 35% in this year. How is it looking on charts?
Manisha, I remain of the view that both gold and silver prices are likely to remain under pressure. It's basically unwinding at higher levels. The economic data points are all pointing towards an easing in the safe haven buying. So there is not much flight to safety or flight to comfort, so to say. I think the 27,450 odd levels will act as a resistance which needs to be watched. Today's closing is very crucial for gold, and as for silver, I think unless you see 42,400 being overcome very forcefully on a closing basis, here again you would see sporadic bursts of upward activity, which would typically be most of it would be short covering and very little in terms of fresh buying. So overhead supply will limit the upside gains. I think leverage buying can be safely avoided.
Take a look at also the energy space, where we have seen a bit of a profit taking coming in today, even as there could be some bullish data coming in from the US weekly inventories. The markets have taken a view slightly on the lower side today. So Gandha, how would you take a look at the prices now in sense of energy?
In terms of crude oil prices, they have been trading firm in last few weeks, but then prices have been under pressure recently as there has been a rebound in production from Libya, and also supply disruption issues have also eased from Iran. So I think there would be some selling pressure at higher levels. Moreover, if we look at the price pattern, prices are facing a strong supply area at levels of around 109 per barrel in NYMEX and at 66.30 odd levels in MCX. So I think a sell and rise strategy would be applicable as of now overall. But then from an intraday perspective, I feel there is likely to be a very strong support emerging at 6,400 mark. So for an intraday stance, I would recommend buying at levels of around 6,410, keeping a stop in place at 63.65 mark, and prices are likely to rebound. Just a rebound is expected in prices up to a level of around 65.80 mark.
Vijay, what's your sense coming in onto the prices as we trade at around 6,470, and especially also in case of the natural gas, how would your strategy be on that?
Manisha, natural gas remains constrained to the lower end of the trading range. The 203, 204 remains a level which the bulls should be able to defend, failing which it can go down by 1% or so lower. On the upside, I think 208 will act as a fairly stiff resistance. I think unless the bull manage to take that glass ceiling out, I think natural gas is likely to remain constrained. And where crude oil is concerned, I think crude oil is witnessing volatility, and anything above 65.20, 65.30 odd levels should invite profit sales from bulls.
The base metal sector also has been very choppy. It really has to do with the Chinese trade numbers that will be released tomorrow in the morning, and that is where they would be taking a direction from. But ahead of that and even after that, Sugandha, how would you want to trade this space?
As you rightly said, Manisha, trade base metals have been under pressure as market is actually eyeing the trade data from China, which will throw more direction about the Chinese economy, which accounts for around 40% of base metal demand, which is the largest consumer of base metals. So market is actually eyeing the Chinese data. But then for intraday stance, I feel there would be a selling pressure at higher levels. So for an intraday stance, one can look for selling opportunities in copper at levels of around 429.50 mark, keeping a stop in place at 432.5 mark, and prices are likely to move lower towards a level of 423 to 422. However, having said that, my overall view in base metals is not very weak because we have seen strong data coming out from US economy, be it the service sector data or the manufacturing data, and also the recently released trade deficit data, which has been quite upbeat, which is actually looking very positive, which has actually brought about some positive sentiments for base metal prices in coming days. So overall view would be to buy on dips, but then just for an intraday stance, I would recommend selling base metals on a higher level.
Vijay, what's your sense coming in for the nickel prices? It has seen a bit of a decline as you were talking about the other day, and the copper prices, would you see some more profit taking there as well?
Yes, Manisha, I would. I remember taking money off the table in copper, and nickel, I said yesterday, should go to the 836 to 838 mark. It's seen a low of 838. Now, should it go to 834 levels, I would wait for signals from the screen as to whether price, volume and open interest correlation indicates some amount of buying. I'm actually expecting a little bit of a buying support at 834 should the prices come there. At that point in time, provided the screen warrants such an action, I don't really mind going long on very curtailed exposure. If this trade of 834, 835 kind of level materializes on the long side, I think 844 is where I would be comfortable booking profits on nickel.
In the meanwhile, the government today introduced the Food Security Bill in the Lok Sabha amidst loud protests. The Lok Sabha was adjourned for the day soon after the Food Security Bill was tabled. The lower house is expected to have a debate on the Food Security Bill now only next Monday. Let's get in then, Mr. Praveen Dongre. He's chairman of the Indian Pulses Association, and he joins us on the show with the same subject. Mr. Dongre, hi, welcome. Of course, it hasn't been passed today. The debate now will happen only Monday. But as we have been chatting up with you, Pulses is not a part of Food Security Bill. How have you read on that?
Well, Food Security Bill, as the country develops and economic growth happens, I think the government should look at not only the calorific fulfillment of the masses, but also the nutritional part of the food security. And when you say nutrition, you talk about protein, and I think in a vegetarian country like India, Pulses can play a very important role in providing this nutritional security to the masses and to the general people across the country, and I think Pulses can fulfill this. So if firstly the government, I think, should look at seriously the nutritional security, and then look at Pulses and probably start a procurement program for the Pulses to build up a buffer stock, because with the logistical and infrastructure that will be created in the distribution of under the Food Security Bill, will very quickly be able to handle the Pulses distribution also. And I think it is a good idea if the government looks at nutritional security and Pulses.
Mr. Dongre, also, have you made a presentation to the government, and what has been their response to the subject?
Well, we are engaged with the government in discussing this. There have been suggestions made by the association, but of course the government at the moment is focusing totally and completely on passing on the Food Security Bill, and it's passing in Parliament, and the humongous task of implementing it, the logistic infrastructure that will be put into place. So they are currently totally involved with this program, but they have begun to listen to it. There is a buzz around pulses, there is a buzz around the production of pulses, the nutritional value of pulses, and I think sooner or later they will start looking at pulses also.
So what's your sense really on what kind of supply, demand and imports perhaps have you seen in the country in the latest few months there, and also what's your sense on the prices now?
Well, to begin with, that India has had one of its largest pulses crops. So for sure the availability of pulses in the country is adequate. It will be further made adequate by the imports that are continuing to happen. So with an 18.45 million ton crop that the government estimates have announced and a 3.5 million ton import, I think there will be enough pulses around. Pulses have seen lower than MSP prices. We have seen some correction over the last couple of weeks, especially in chana and to some extent in tuar and urad and other commodities. So I think the prices will continue to improve as we go away from the harvest and harvest period. But they should remain range bound throughout the year.
So what's your sense if you come out with a target on a price level then?
It's difficult to put a price level, but I think from 10% from here we could see an upswing and then the markets will stabilize.
As you pointed out that perhaps near term due to festivals we might see a gain, but harvesting is expected to put pressure in the going forward perhaps 2 to 3 months from now?
It will be, yes. I think we will see a rise in prices of up to 10% as we go into the pulses, into the festival season. And then once we start harvesting our first kharif crop, our kharif crop, and then we will see prices stabilize and then probably move in a price range.
All right, Mr. Dongre, appreciate you joining us. So that's the view really coming in from the Indian Pulses Association, that the food security bill perhaps should take pulses as a part of it. And apart from that, the prices itself may see nearly a 10% jump up as we head into the festival season. Today, of course, we've seen nearly 1% of a cut coming into those prices. Vijay, what's your sense on charts? Because it's been a 1 day of rise and 1 day of decline coming in for that commodity.
You're right, Manisha. And as we spoke about this yesterday, taking China September futures as a case in point, I did mention that there would be some amount of profit taking, because from 2611 as a bottom on the September future series, China had crossed 2,800. Now that's a good 8 to 10% jump up in pulses, which is as a trader a mouth-watering amount of money not to book profits on. So the markets being what they are, they're taking money off the table, and at this point in time I would want to see lower levels before fresh buying coming in. Now I don't think waiting up to 2,611 as a double bottom makes sense, because that's where most of the bulls would basically get fed up with their long position and surrender them. So now the support in this case would be significantly higher. I would watch the 2,720 mark on the September future series. As long as the bulls are managing to defend that level, I think an uptick can occur from there. It will be more of a tradable bounce than a very powerful rally from here, because upsides will still meet with selling pressure. I would wait and see how the market behaves on the upside at 2,840, 2,860 kind of band. If it goes through that and shoots past that, then probably the rally has legs. Otherwise, I expect profit taking there.
A view on also the spices space, Vijay, because cardamom is up 4%, turmeric is up 4% as well. Do you think there's some money flowing into spices?
Yes, Manisha, I think so. And what is happening is that nerves are now getting calmer as the NSCL payout issue is getting more and more clear. The announcement of stocks, the timetable announced for the releasing of the money, the payouts actually is basically easing a whole lot of nerves, and I think a risk appetite is now returning back into the markets. So I wouldn't really be surprised to see some more headroom on the upside, and most of that headroom might also be powered by the bears being forced into a corner and covering their shorts. So this bear squeeze, as long as it continues, I think another 3 to 5% on the upside should not be ruled out.